Welcome to the Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
Hello and welcome to the Liquidity Event. We're your hosts, Shane Mason.
And I'm AJ Ayers. I am .ai now.
She is .ai. That's Jamaican. And this is episode 122 being recorded on October 8th, airing October 11th. It's spooky season, AJ. What's going on? A quick reminder for you listeners, we will be answering your questions on the pod. If you leave us a message, you can disguise your voice and use a fake name if you're shy. The link is memo.fm/the liquidity event. What's up? Are we going to be a witch this year?
Oh, I'm a witch every year. I'm a witch today. You know, being witchy is my favorite thing. Last year, my friends and I were basic witches. We had like Starbucks cups and witch hats. It was cute.
That's good. I was at the Halloween store last night doing a preview. I'm in downtown Manhattan these days. And
welcome to New York. I'm sorry. You've been in New York for how many days and you haven't even called me? I hate YouTube, brother.
I've been here 5 days.
Cool.
Yes.
Cool.
We have a date on Friday night.
Great. Can't wait.
We have a pre-scheduled business partner situation. Why, you trying to go to a New York Mets game tonight? You trying to go to a playoff game for $400?
Or are you going to the playoff game? Oh.
No, but that's what
I feel like that's not what I would spend $400 on, which we're going to talk about later. We're going to talk about spending, how much is too much to spend on experiences. $400 for a Mets game sounds like a steal for someone who loves baseball. Not that I don't love baseball. That's just not something that I would not spend more money to see an important game. I'd rather just go and have fun and eat some hot dogs.
What was it's the playoffs now, and they're playing the Phillies, which is like a great New York Northeast rivalry, and the Mets might go on to play the Yankees in a Subway Series.
Oh, Subway Series. See, I know that.
Well, but those tickets start at $5,000. That would be the World Series. That's the only way that happens.
Word.
Like you can literally buy them now. You can start for nosebleeds $5,000.
Yeah. Cool.
Anyway,
well, I'm gonna give that one a miss.
I won't see you there. I've actually been to a Phillies World Series before. Which is kind of crazy.
Good for you.
I don't think our listeners give a shit about
that.
Good
for her.
Yeah. No. I like the. By the way, John, whenever I travel, John says I gallivant. And whenever you travel, so he's like, yes, she's traveling.
She's doing important business meetings. The double standard. Don't you hate it?
I'm like, bro.
Welcome to New York. I can hear the sirens in the back of your background. I don't know if that's me or you.
I think it adds. No, it's definitely me. It just flew down.
Oh, fantastic.
Like in Chinatown. By the way, living in Chinatown, one of the sickest things about it is the firemen in Chinatown call themselves the Dragon Fighters, and they just have like they have like special fire trucks, like just designs
Sick.
On the fire trucks.
Love a good fire truck.
Shit.
You know, the fire trucks in Palm Springs are white and they're beautiful.
Ew.
They're so cool. Trust me, I'm gonna send you a pic. Anyway,
yeah.
Also, Shane, do we need to get you a better camera for those of you watching on YouTube? Shane, you're pretty blurry. I feel like the webcams we have are like 10 years old.
That's a good point. I used my phone on the last recording we did, which I looked good in terms of resolution, but the audio is trash.
Oh, bummer.
So yeah, I think we got to update the cameras.
I feel like I prefer my pores in 72p or whatever. My pores are not ready for 4K.
Your pores, bro.
They're okay.
4 or 5 of your pores could fit into one of my pores. I don't know if we want to talk. I don't know if we want to do a pore measuring contest. Here, I think I know who would. It's like a golf situation. Low score, the better.
Your handicap? What's your pore handicap? Okay, speaking
Gross.
of
right.
being
going
poor,
off camera.
Speaking of being poor, if you are an employee at OpenAI, you are not poor because OpenAI, the parent company of our beloved ChatGPT, everyone's favorite smart robot, just raised $6.6 billion in their latest funding round, basically doubling the value of this company since, 2023? That was the last time they did a funding round.
No, they had one in February at which led them to a valuation of $86 billion.
Oh, I'm sorry. So it's been less than a year, and they're doubled in less than a year. That's cool.
Sorry, that's the only prep I did for this podcast was that math.
That number? Okay, cool. So I'll just take it from here.
It's on an Excel spreadsheet on my screen right now.
Shane's always good for some quick accounting work.
It is an 80. Hold on, let me give you the decimal.
Give me, tell me.
82.6% increase.
Incredible.
In valuation.
Thank you.
Yes. Some would say they would make the Inc. 5000.
Not better than Brooklyn FI's place at number 561 or whatever we were.
You know what's funny is we do apply for the Inc. 5000 and we do get it because we're a very fast growing company. But it's funny when you don't see any other giant companies on the list.
OpenAI sadly did not make the Inc. 5000 because they don't have their marketing team didn't submit.
Yeah, they missed the deadline.
Bummer. It sucks for them. But no, this is big news, obviously. They're now worth, what are they worth? What does your spreadsheet say?
157. Okay. $157 billion. The most valuable private company in the world.
Fantastic. But this is really big news. Why we're talking about it on this podcast, which is aptly named The Liquidity Event, is because OpenAI employees, first of all, OpenAI is converting itself from a company that was like, oh, we're not going to be a profit company. We're going to cap our profits at a certain amount. They're like, no, wait a second. Did you say we're the most valuable private company? Let's just convert our entire corporate structure to actually be able to make unlimited profits because things are looking pretty good for us right now. Is basically what happened in a nutshell at the highest level. But, oh, go ahead.
Well, I just think that, I have this phrase that profit is fuel, you need it.
I thought you were going to say everyone thinks they're middle class.
Oh, no, that's one of my other talking points. Shane has about 7 talking. If you pull the string coming out of Shane's back.
Everyone thinks they're middle class. OpenAI thinks they're middle class.
Yeah, God's not real. One iced coffee, please.
Can I have your phone number? You have beautiful eyes.
Stop. No gallivanting. I want a girlfriend. Anyway, so
he's ready to settle down.
Please. Just like Sam Altman, apparently.
Exactly. But not their CTO who just left last week. Very impressive woman. CTO, CEO.
A lot of people are leaving, honestly,
yeah.
And there's some theories about what's going on here because we forgot about. Remember when Sam Altman was ousted recently?
Right.
The theories are that the ousters are the people that are leaving the firm because they stabbed the king and the king didn't die, and now he's back at the top of the heap, and they were all probably have been given opportunities to submit their resignations now that Sam is back in the driver's seat.
Yeah, sorry. Let me just clarify what I was saying. Mira Marathi was their CTO. She left last week or late September. She was out, further depleting the impressive female C-suite people that Silicon Valley can talk about. So that was a big bummer.
Yeah, well, the company's going to be a lot different than it used to be. I mean, the valuation, even to go from an $80 billion company to a $160 billion company, which it did this year, means that, and then a $6 billion injection of cash. I mean, to be fair, they're losing $5 billion a year. They're projected to lose $5 billion a year. So this float isn't really that much runway, honestly, but they're going to hire. How many people do you think you could hire with $6 billion, AJ? If the company is about to transform into something totally different.
A lot of ping pong tables.
Just $1 billion for ping pong. And then there's going to be a lot of fresh blood. I imagine there's a lot of turnover at the top of the company. People the theory is that they were a part of that ousting of Sam Altman. Their shares have vested. We're going to talk about the opportunity to sell their shares to not only the VCs but back to Altman, or back to not Altman, but back to the company, back to OpenAI. So I imagine, yeah, some people are like, all right, I was here for the fun days of 5-6 years at the beginning. Has it even been that long? Oh, yeah, it's like 2018.
I vested my equity, so I'm good.
Yeah, fully vested. The shares that are coming in at this rate, it's hard to go from 0 to $160 billion, right? But
I wouldn't know, Shane, honestly.
they've created these people that are leaving. I imagine all have 9-figure or at least 8 figures of winnings from being at the company for this long.
For sure.
But what else do we? And they're also they're all long-term cap gains. They might even be QSBS, which means that the first $10 million of the gains that they experience are not going to be subject to federal income tax and maybe not even state income tax. I'm not sure. I forget if California recognizes QSBS. Yeah, they do.
They do.
Yeah, we have
I think it's New York that doesn't.
Some clients there.
Yeah. Don't quote me on that though.
Yeah.
So.
All right. I just ran away. What's going on?
Well, no, I was just saying this is like this. So what we're talking about is called a tender offer, right? A tender offer is when you are an employee at a company or a former employee. You are a shareholder of a company. And instead of, this is a private company, right? This company is not gone public, but this is an opportunity for you to get some liquidity. Somebody wants to buy your shares, right? It's not an open market. It's not a public market. It's a closed market. And typically it's very restrictive as to who can buy those shares, right? You can't just log into Robinhood and buy shares of OpenAI right now. Someone may fact check me on that, but I don't think you can. The people who can buy shares of OpenAI are these large investors coming in, like who do we have? SoftBank, Microsoft, Nvidia are some of the investors, and or Sam Altman or existing major shareholders. These are the people that are going to be the purchasers in this tender offer, and the people who are selling are employees who want some liquidity. So we see tender offers all the time. This is something that Brooklyn FI has a ton of experience with. We've actually seen them skyrocket dramatically in the past 2 years because companies are staying private longer. So we're not seeing a ton of IPOs. A lot of our clients are waiting at these private companies, waiting for a public liquidity event, but they're actually getting these kind of nice, quick and dirty tender offers, which basically are fairly straightforward. The price is set. Usually you can sell up to 20% of the total amount of stock that you own individually as a shareholder, which is pretty generous. Some people probably wish it was more. Some people choose to do less. Generally, we always advise our clients to participate a little bit. Maybe you don't want to do the full 20%, but take some chips off the table. You have a great chance at liquidity. And at maximum, it's only a fifth of what you have.
I mean, come on, that's not taking chips off the table. Like usually this is going to be 99% of these people's net worth. So to take 20% off the table, you still have, if you can only do this once every 2 years, which is oftentimes the time frame between tender offers, not to cut you off, but like 20% every 2 years, it's going to take you 10 years to exit the firm.
Yep.
So it sounds like not much of it isn't much of a cap. It's going to take you a long time if you only do the full 100% of what's available to you each year. Sorry, I can go on.
No, true. And also we typically don't see 5 tender offers over a 10-year period. We usually see 2 or 3 before other stakeholders are like, all right, I want to exit more. Private equity is involved. Like we actually need a real public event where we can exit more. And I don't want to just exit in one event every 2 years. I want the opportunity to sell as the market sets our share price. So if you're an employee at OpenAI right now, you probably got an email from your CFO, Sarah Fryer, saying, hey, everyone, we will be offering a tender offer. We don't know the details yet. It'll happen sometime soon. It sounds like it's imminent. It could be even Q4 of this year, which if you do not have a financial planner and you work at OpenAI, please run to your nearest financial planner because you have some very serious tax planning to do this year. I kind of hope it's in 2025 just for all of the employees' sakes, but hopefully they already have financial planners because this is a major tax event, right? We talked earlier about these shares hopefully being long-term capital gains, but I could see a lot of these, maybe there's some options here, maybe they're not. Maybe some folks are just going to exercise and sell them the same day, and they're going to have a lot of ordinary income, which is going to be really nasty if you live in California or New York. Go ahead. You did an interrupting sigh.
You saw that? AJ's watching my face. She sees my mouth slowly opening. Well, the hard thing about not interrupting, most of it is just because I don't want to forget what I want to say.
No, it's fine. You can interrupt.
And one of us can do like a 5-minute soliloquy, which is incredible and super useful. And the other was like, oh, wait. I got to get
I got to
sound smart. Got to sound smart.
Go ahead. Get in there.
Well, and then I was thinking about, this. I was going to say this could end up in another Stripe situation where you don't know when the IPO is ever going to happen. If it ever does happen, of course, it does eventually happen. I guess it doesn't eventually have to happen, but a lot of VCs are expecting it to happen. And then I remembered that the CFO of OpenAI was the CFO of Stripe. So she's more than willing to. She knows how to take a company.
This ain't her first rodeo, as we like to say. She knows how to drag it out.
Yeah. She takes a while. So they could be on series. They could be. Oh no! There could be a series L M N O P Q R S T U. Why can't you get me out of here? Yeah. So so this is just circling back to that 20% of your holdings, and then you're probably going to get refresher grants year 2, year 3, year 4. Your first grant is going to, after 4 years, they're going to have to give you a refresher grant. So just that 20%, it's going to be hard to fully exit your company.
Yeah, hopefully they gave the grants before this funding round closed, right? Ideally, you wanted your grant to happen at the lower valuation, lower share price. That'd be nice. I do.
Yeah, shout out to all the employees that got a performance review a month ago. Yeah. When the 409A was 83% lower, 82.6% lower. Congrats on your immediate windfall. So I like what you were saying.
Well, you interrupted me, so I completely lost my train of thought. But basically, tender offers are kind of like a no-brainer. Like if your company's doing a tender, like absolutely take advantage of it. Understand your tax consequences, but this is just a great opportunity. I think people come to expect them. I mean, Stripe is a great example. People like Stripe employees have come to expect tender offers about every 18 months. And they're just like little baby birds, like waiting for the next tender offer. You want to buy a house, you're waiting for the next tender. You want to send your kids to school, you're waiting for the next tender. You want to leave the company, although I guess that doesn't really impact it because remember, tender offers are usually available to current employees and former employees as long as they were RSUs, you have them. But as long as you exercise your shares before you left, very important.
Yeah, but as you know, it's so much easier to participate in a company's equity compensation package or their stock plan as a current employee.
There, totally.
Yeah. So it's just once you leave a company, people get so weird about interacting with the company that they used to work with, right? Like once you've done an exit interview and you've spilled a little bit of tea, like to the owners, like you feel like you're not welcome back there. Do you feel the same way?
Yes. Although I did go through a liquidity event at a former company, which was interesting. And that wasn't, I left on great terms. That was Bandcamp. I love Bandcamp forever. But it wasn't necessarily weird vibes. It was just like, who do I talk to here? Like I'm getting drips of information. Still had a bunch of friends there, so I was getting information from them. But yeah, you're a little bit alienated once you leave a company. So I would imagine we probably see a little bit of an exit of employees after this tender offer. It's like, oh, I got my 20%. Like I'm gonna go work somewhere else that's more interesting. My resume says I worked at OpenAI from 2022 to 2024. I can go work literally anywhere I want. So that's a great long-term investment strategy.
For any former employees of OpenAI, we are trading financial plans for hours working on our proprietary equity compensation trading platform with a built-in machine learning algorithm, Gemify.
Indeed.
Great point. Yeah, I expect to see even more exits after this secondary sale. No?
Totally. I mean, that's the thing. It's like whenever there's an opportunity for liquidity, someone's life was stalled waiting for this opportunity to do the next thing. So I imagine we will see some exits. And now that there's a big influx of cash, like you said earlier, and we'll also probably do a lot of hiring. That's a lot of people you can hire for $6.6 billion. Also a lot of ping pong tables. What else? Generally, like I feel we just been through so many tender offers. It's kind of confusing because we have the CFO saying, okay, this is going to happen. But when a tender offer actually does go through, it's a very strict, specific thing that happens, right? They announce a tender offer. Usually it's like 20 to 30 days to decide if you want to participate. You say yes or no. You say how many shares you want to pay, and then it gets processed, and like that's it. There's like no. It's kind of confusing. It's not like an open market trade where the price fluctuates. It's just like that's what it is. It's like a handshake deal, sign on the dotted line, and the money shows up in your bank account the next day. Like it's pretty wild. Like actually walking the clients through this, it is pretty eye-opening. I prefer this, honestly. I don't know if I like the type of like most employees are like, yeah, I want my company to go public. I want my company to go public. Like, are you ready for that intra-second price change of your net worth? Like, at least with private companies, we get a 498 update like at minimum every 6 months, but probably more like every 2 years. So like, you know how much your potential net worth is, where when your company's public, every day that stock price is going up and down. It's nerve-wracking.
Yeah, no, we know from human psychology reviews and part of our CFP program education that people aren't, our brains are not wired to handle the day-to-day fluctuations in their personal net worth. And people that don't ever log into their investment accounts tend to perform a lot better than those that never log, or they just do perform better than those that don't log in. So, and then you tie that to like a company that you currently work with. You're having meetings. You're thinking about this company probably 50 hours a week. It's just a recipe for stress, for sure.
Yep. I mean, to me, it's like why is OpenAI so valuable? Like, it's not just ChatGPT, right? It's not just the consumer-facing product that we all know and love and hang out with. It's the implications of that in the future, right? We're buying the future of what this technology is going to do. So I think that's what's important. Like, for employee, like if I was looking for a job right now, I would want to go work at a company like OpenAI. Like, who knows? People ask us all the time, like, is AI going to replace financial advisors? Is AI going to replace bookkeepers? Is AI going to do our taxes for us? Like, probably at some point. I don't know when, and I want to be as close to the people who are trying to figure that out as possible. Don't you agree?
Yeah, I mean, of course, they're the hottest place to work. It's great on the resume. And then it's definitely trading on the future. I mean, let me run the numbers here. At $157 billion valuation, it's trading. They only have $300 million in revenue. So 10 is 3 billion. And then, so they're trading at like over 50 times revenue, you know? So, that is, whereas a auto company will trade at like 1 times revenue or 0.7 times revenue. Whereas like a Brooklyn FI will trade at 2 times revenue, 2.5 times revenue. So yeah, they're betting that they can infiltrate or all these tools. I was using Duolingo earlier, and they're like working in AI into the app, right? Like, it's going to be used in a billion different places, and they're going to be able to monetize the natural language processing capabilities. And then I was at Intuit last week, and they have a proprietary AI platform, but they're also weaving in AI, natural language processing, into the accounting software, which I think is a really huge opportunity and really one of the coolest ways to use natural language processing, because there's just like a gap between how people understand finance and financials and really good advice and getting to that data, and the human person on the other end that can actually use that information, but it needs to be dumbed down, or I don't know, it needs to go through some sort of prism to get it in front of people in a useful manner. And I think that's what natural language processing is excellent at. I think it might not be, I don't think it's going to take our job, AJ. I think it'll take the jobs of people, a lot of people at the lower end of the this white collar spectrum.
Totally.
But maybe those people, when those jobs are gone, they might get pushed up to where we are. Who knows where it's going to go?
Who knows? I love this tweet. I think you maybe mentioned this before. The tweet is, you know what the biggest problem with pushing all things AI is? Wrong direction. I want AI to do my laundry and dishes so that I can do art and writing, not for AI to do my art and writing so that I can do my laundry and dishes. I love that. I love that sentiment so much.
Yeah, no, I think the original tweet was artists losing their jobs to AI and then dishwashers keeping their jobs is not the future I had hoped for.
Yeah, right. Exactly. Same sentiment. Yeah, exactly.
Yeah.
Like, cool, we can, I don't have to hire a graphic designer because I can use AI to generate a cute logo, but like, who cares? Like, but then I have to like still go do all my chores, or I still have to, like, we haven't gotten to the point where AI can connect the dots, right? It's good at processing things in a vacuum. I think we'll get there. I'm long on AI. I'm pro.
Yeah.
Hot take. AI is the future. All right. Before anything else you want to say on this?
Yeah, I just ran the numbers. Actually, it's 44 times revenue. So, so some of the most highly. Well, I think I had screwed it up because that was the monthly revenue is $300 million. So
yeah, but I mean, how far? Sorry, go ahead.
No, good. How far till what?
I was going to say, how far away do you think we are from, I mean, I guess we're kind of there, like you and I on this podcast, having ChatGPT open, being like, what's the, like, instead of you doing those numbers on your spreadsheet, like having the AI actually just kind of like get ahead of us and realize what we're talking about and be like throwing statistics out at us to pick up.
Oh, you mean like when a real podcast has like a producer that they can talk to in the middle of it?
Oh yeah, maybe that.
Or like an intern.
I forgot. I have a surprise for you. All right, you ready?
Oh yeah, what's up?
Okay, so I'm just so curious. Like anytime a new product in the AI space comes out, I like to test it out because I think it's fun. And there's this new product called Google Notebook, and you can basically create a podcast. So speaking of people coming for our jobs, I uploaded John, our director of investments and managing partner, wrote his Q3 market commentary, which is his words based on his interpretation of the markets and what things happen in Q3. So John and I talked about this last week a little bit, but I fed in John's like 15-page white paper to this AI, and it made a 6-minute and 50-second podcast for us. I'm going to play a little bit of it right now. No. You ready? Are you ready?
Yeah, let's go. God. What the fuck?
Oh my God, John's so stoked.
All right. Cut the tape.
You got it? Wait.
Is that you and I, or is that just generic podcast people?
That's generic podcast people. So I didn't do anything. I didn't tell it anything. I just literally uploaded the PDF, and it took about 2 minutes to process, and then it spit out this MP4 for me to download. It's 7 minutes long. I mean, I'm just going to jump to a random spot and play 10 seconds just so we can get a little more flavor. That was kind of like the intro. They're riffing. Okay, blah, blah, blah. All right. Anyway, but like the transition they get, the jokes they make, like it's really spot on. So basically, again, like AI has like taken the jobs away from like podcasters, not the original people writing the report. Like, so not so fun. No, thank you. But yeah, if you're bored, check out Google Notebook. It's pretty sweet. Yeah, you can just you can send it you can just like paste a link in, you can upload a PDF, and it'll just synthesize it and then make a podcast about it.
I'm sure that's based on their Gemini AI that they've been working on over at Google. I'm excited to see where these things go. Right now, it feels like they're just going to flood the internet with trash. Which was already probably flooded with trash. A big Pacific trash pile has already kind of been on the internet. But
isn't large language model by definition just repurposing a huge pile of trash? Like all of these language models are just literally reading the internet and synthesizing it.
Yeah. It's like, all right, here, if the internet was a location, it would turn out most of it would be landfill trash. So they're just going to like duplicate that to make more landfill all over the internet. It's fantastic. It's lovely.
It's lovely.
Fantastic. We finally ruined the internet. 2024, probably 2025.
So we have a listener question before we go.
Yes.
I love these Reddit questions. This one comes from Rich People PF. Tax question guy 69 is the user. How do you rationalize purchases? Doing quite well, mid 30s, 5.2 million net worth, recurring income of 350 to 450K depending on the year. I've always been relatively frugal, not tight but not spendy. I struggle with deciding whether certain purchases are reasonable or not. For example, is blowing $600 to be more comfortable in first class on a 4-hour flight reasonable given my net worth? Is staying at a super fancy Four Seasons hotel once a year reasonable? How do you make these decisions? Thoughts, Shane?
My first thoughts, well, I didn't realize his name was Tax Questions Guy 69, so I did not dig into his
So you didn't know we were best
history.
friends.
Yeah, I'm all Tax Guy 69. Let me read He lives in Denver. He's posting in the Denver subreddit. He's on the Scotch subreddit asking questions.
All right. Anyway.
Tax guy 69, DM me, bro. He also thinks Pappy Van Winkle is good, which never mind. Don't DM me. But listen, how much money to spend? He said he's making $400K a year on average. He's got $5 million in net worth, and he's in his mid-30s. Didn't say anything about a family. So you can essentially spend a lot of fucking money, my man. It just depends on, well, first of all, there's formulas that we use at Brooklynify to help figure out what somebody should be spending on discretionary products, right? But for somebody like this, we might want to bend the formula because typically we would want you to save 20% of your income, which in your case would be $400K,
it's just 80 grand.
Yeah, about $80K per year, which would be fairly easy probably for someone like you. He calls himself not frugal and not spendy, but somewhere in the middle. So, you get 25K in your 401K, you fill up a Roth, you do an HSA, maybe a 529. You're already at 40. You dump the other 40 into a mortgage or into just a brokerage account, and you got a lot of money left over. You pay $200 to your taxes. Your housing's probably covered there. Like, bro, the rest you can spend. And you can spend it on scotch, but Isla scotch, not Pappy Van Winkle from Tennessee. Bourbon is gross. It's too sweet, guy. So that's one way to go about it. How do you feel about using the 50-30-20 methodology to figure out how much you should spend? That's a default.
I don't like rules. I think 50-30. I think rules are really helpful to get to this point. I think if you are not able to save 20% of your income every year, you need rules and you need to pay attention to what you spend. I think that's absolutely essential. That's the first thing I tell anyone who's like, I need to get my financial life together. Can I hire you? It's like, no, you just need to get your spending under control. Like, that's step one. But once you don't need to get your spending under control, meaning that you can comfortably pay for your housing, your lifestyle, and you're able to save 20%, I don't want you to have a budget. Like, spend what you want. Like, you've made it. Like, money is for spending. I feel like older generations spend so much time thinking about, like, how do I tax optimize this trust so my this and that I can it's like, you got one life. Like, also the oceans are going to flood the major cities in the next 100 years. So, like, spend your money. I don't like this attachment to the financial independence retire early movement of I'm saving. I'm going to ruin my life for the next 15 years. So in the future, I can eke out an existence. You have then ruined your personality. If you're so afraid to spend money and bring yourself a little bit of joy, do you think you're going to enjoy that retirement? No, you're going to be miserable because you're going to be counting every penny. That's kind of one extreme, but I do think, I love this question. I think this is a legitimate, like fear that people have. Like, okay, I have all this money. I worked really hard. Like, am I allowed to spend it? And how should I spend it? Being more comfortable on a flight. If you're taller than 5'6", it sucks to sit in economy. Spend the money, right? You have a point?
No, I'm taller than 5'6", so I was.
Oh, you are. Okay.
Yeah,
yes.
In case you forgot, we haven't seen each other in a while.
Shane 6'5", blue eyes, finance, trust fund, whatever.
Self-made trust fund.
Super fancy Four Seasons hotel once a year. Absolutely, completely unreasonable. At least 3 times a year. Look, I'm in the spend money camp. I don't know. Also, like, it depends on your philosophy. Yeah, if this guy's got a spouse, I assume it's a guy. Yeah, guy. Tax question, guy. 69. This is a guy. If we've got a spouse and a couple of kids, probably can't be a spendy because there are more things that could require all of that money. If you've got older family members you got to take care of, you've got siblings that you got to take care of, yeah, you should probably be a little bit more responsible. But, like, you made the money, spend it. Give some of it away, right? Make yourself feel good. Do some good in the world. Buy your friends plane tickets to come with you if you don't have, buddies.
Huge
or
fan of
spouses.
that.
Yeah.
Huge fan of that. Also, at shameless self-plug, we ran the numbers. What is the discretionary on 500K or 400K of income? You're supposed to spend 50-30, 30% of that or 20% of that. I'm sorry, 30% of that on discretionary.
Yeah.
It's like, over 100K, maybe closer to 200K of discretionary spending. Might drop 5% of that budget into a financial planner so that you don't have to ask these questions on Reddit, right? Like, you've got quite a bit of money now. You got quite a bit of income. maybe it's time to
isn't
slide
that-
5K per year to somebody that can help you navigate this asset that you have, which is a huge net worth and an income stream is an asset. It might even be more valuable than just a retirement account because that can be, monetized. That money can be monetized.
All right, I've got a way to codify my rant earlier in that financial independence is not just having enough money so you don't have to work. It's having enough money and having the right mindset that you don't think about money. You don't think about this. I feel bad for this guy that he's agonizing over these decisions. True financial independence is being in tune enough with how much money you have, what your goals are, how you define happiness to be able to spend on things that matter to you and that you know will make you happy, right? Financial independence is not like, oh, I'm rich now, I should buy a car. Or like, I'm rich now, I should buy this. Like, we see this all the time with sudden wealth. Like, oh, here's the things that I think I'm supposed to do. Like, long-term, hard-earned financial independence is realizing, yes, for me, getting a massage once a month is a luxury that I love and I know I need it. It makes me so happy. So I'm going to do that, right? That's going to cost me $300. Someone would be like, oh my God, that's so much money. You spend thousands of dollars a year on that. Yes, it makes me very happy. That is a very good use of $300 for me. What's one for you, Shane, that you're just like, always will spend the money?
Scotch. I mean, Ardbeg 10-year, way cheaper than Pappy Van Winkle. That's for sure. I mean, it does make me happy. Obviously, meals and experiences with the boys, with your friends, with anyone that you hold, that you love, that are close to you. Anything that you are going to be, on your, nurses interviewed people on their deathbed for years, and the one thing that people never said that they wish they had done more of is spend more time in the office. Everyone wanted to spend more time with their friends and family, having experiences. Nobody's on their deathbed saying, "Damn, if I only had spent a little bit more time in the office." So I kind of use that as a barometer for knocking off, or to triangulate what I should be spending my money on, like bucket list items. A terrifying thing about this year, AJ, is creating a bucket list that's true to what you want to accomplish, and then trying to back into your timing on how you're going to get all those things done, and realizing even in mid-30s, it's going to be hard to knock all this stuff out. So just keep that in mind, dear listener.
Life is short, y'all. Yeah. I mean, anyway, that's a point for another time. All right, I think we can wrap it up there. Awesome.
Wait, I need your massage person.
Oh.
Speaking of your massage person, before I forget, I got some serious back pain. I've been thinking about. Yes, we can wrap it up. Thank you.
I'm not giving you my massage person. Anyway.
No.
Thanks so much for listening. Email us your financial problems at liquidityevent@brooklynfi.com. Leave us a voicemail at memo.fm/liquidityevent. We will play it on the air. And finally, Stans can leave us a review if they want to be weird about it. I'm AJ. That's Shane. This is the Liquidity Event. We'll see you next week. Actually, we won't see you next week. We're taking a break. We're going to be in Minneapolis hanging with our friends and talking about business. So we'll see you in 2 weeks. Love you. Bye.
Bye.